Over the past few weeks, I've made time to review the real current state of the market, the history of property in Australia over the last 55 years, boom, bust, recovery, and what we should do going forward. And if you are a long-term investor, the fear-mongering isn't really going to slow you down, okay? But we all need reassurance. And I believe that 4 different forces are converging simultaneously at the moment. None of them is reversing in the short or medium term. And the 5th force, which is market fear and low consumer confidence, is creating a window of opportunity that won't stay open for long. When one works with investments and buyer psychology, one becomes all too familiar with the Goldilocks Dilemma. Now, I'm not here to discuss why a young girl is breaking into people's houses, destroying furniture, stealing food, all with the intention of becoming a squatter. I'm actually talking more specifically about investors striving to find the perfect environment to enter. I can tell you, when looking at the Australian property market over the last 55 years, there have been some perfect moments. But this all comes with hindsight, and this also comes when you miss those moments. And the decision you have to make is, I missed that moment, will I miss the next one? These moments are always, or almost always, disguised as a crisis. And this chart shows real inflation-adjusted home prices. So not nominal prices. In periods of high inflation, nominal prices may have actually risen while real returns were actually negative. So this gives you the actual number, what you would really see taking that into account. So in 55 years, through oil crises, recessions, double-digit interest rate environments, a global financial crisis, a pandemic, and now the fastest rate hike cycle on record, Australia's property has recovered every single time and has gone on to reach new highs basically every single time, with an average time period of about 2 years. Okay? Let's take away all the good stuff that's on this chart so you can see this. And I'm actually going to create an interactive version of this chart for everyone to review and play around with a little bit later. It will be up on our website within the next week or so. But this shows you 55 years. You can pause this and have a little bit more of a look at it if you like. But let's eliminate all the good stuff here, all the times where people would be like, oh, I wish I was in there then. Let's focus and shorten the data a little bit, and let's look at the last 40 years. Let's see how across Australia's combined capital city housing market, how has it navigated the last 10 downturns where home values fell over at least a 3-month period. That constitutes as a downturn, okay? So it has to be 3 months and more. So in 8 out of 10 of these downturns, the calendar year in which the market bottomed still ended with prices either flat or positive. And that was due to strong first and second half framing effects. Now, you'll probably remember this from 2020 when COVID happened. It was March, and basically up until around September, the market was not looking very good. And by the end of the year, the market propped itself back up again. Why? I think people become immune to fear-mongering, negativity, and just seeing all these bad things in the media. And after a little while, they become desensitized and they just get along with life. Importantly, about what I'm talking about, the media, they amplify fears because fears generate clicks. And that fear has consistently caused investors to sit on the sidelines at exactly the wrong moment. Let's look at a few of these. And obviously, I have literally hundreds of these headlines, but let's just stick to a few of them. COVID-19, 2020. The University of Melbourne, Capital Economics, and multiple banks forecast a 20 to 30% fall in the market. The Guardian ran the headline, instead, 2021 saw the fastest price growth in 50 years. And that's nationally over 20%. So for 2020, you can see that on here. The Guardian ran this headline. I'll just move this out of the way quickly. So property crash of 20% to 30% forecast, disturbing outlook, okay? Then we got rate rises in 2022. And what did we see there? We saw ANZ came out with the headline. ANZ predicts 20% crash by the end of 2023, okay? Now, AMP's Shane Oliver was the one that actually said that. CBA actually publicly abandoned its 50% crash forecast afterwards, which is quite interesting because the actual correction was 9.1%. And by March 2023, prices were actually rising again. Then you've got the mortgage cliff, 2023. The narrative was waves of forced sellers will flood the market. Instead, what happened? The market continued to defy expectation. The GFC, 2008 to 2009. Australia avoided recession while the rest of the world crashed. And that was honestly because of our hero, which was Western Australia, Perth, protecting us with the natural resources sector. The property market corrected. It was down 2.2%. Then the national median price point rose by 12.1% in the following 12 months. Recession, 1990 to 1991, Australia's worst downturn since the Great Depression. Properties rose in most markets. So the pattern here is that property in Australia has an extraordinary record of rebounding, and the forces that support it, so chronic undersupply, population growth, land scarcity, lending standards, are more powerful than the forces that periodically scare buyers away. So this is another reason why I've got a lot of hope. Some more data here. This is me taking away even more of that noise in regards to, downturns and economic events nationally and globally. And what you'll see at the bottom here is I've basically highlighted my top 14 international and national events that affected Australian property. And you can see those going across that line graph there. And you can see the downturns are in that red little mist that's standing behind there. Look at what Australia property has done. Does it look like, if I looked at some of these things, negative gearing being removed in 1985, oh no, the recession in 1990, capital gains tax discount increased and it being now 50% in 1999, up 7.5%. Like all of these things, again, if you focus on the news and the events, you'll never see this. And if we look at what's currently happening in the media, it seems like the current news cycle has turned the fear dial up to 10. Does this scare me? No. Why? Because I've seen it time and time again. And at this point, the probability is that these guys are going to keep being wrong. And when we look back at the best times to buy into the property market, there are only a few of these. And like I said before, they're usually disguised as crises. We believe we're about to see a rare opportunity where buyers have the strongest negotiation power that they've had in years. The ironic thing here is that I'm often talking to clients that will say to me, market's too hot, I'm waiting for it to cool down. You're finally in a stage where the market has cooled down. All those people that were telling me I want to jump in, I've called them over the last couple of weeks. I can tell you, except for 2 of them, out of the dozens of people I've spoken to, all of those people are still waiting. It's never going to be a perfect time, ever.